Hello, everyone. Welcome to today's session. In this short session, I'm going to give you a brief introduction of our power planning product. Okay, so let's have a look together. Okay, before we go to the main content of the presentation, I just want to mention a couple of things. Okay, first thing is the information provided here is for general information only. So before you make any decisions, please contact an experienced tax agent, financial planner, solicitor, or one of our power planners. Second thing I want to mention, we're not financial planners, and we will not provide financial product advice. Okay, and also any other advice that has to be covered by a registered financial planner. All right, so that's very important. All right, so let's have a look at our power planning product. So what is power planning? Okay, so it's actually a new term we have invented ourselves, and the reason why we're calling it power planning is because it's not financial planning, it's very different, but it's actually more powerful to help you to increase your net wealth in the long run, okay, long term. And then it's actually focusing on where you put your asset or investment instead of how you invest. So I'll illustrate a little bit later. And then also it's focusing on long-term tax savings on income and capital gains taxes on ownership structures, okay? And there's no or minimum lifestyle changes. Sometimes in financial planning, typically if you can't meet a future, like a short-term goal, you might want to sacrifice some lifestyle requirements. You might want to cut down going out to restaurants or buying some other things you like and to be able to achieve a future goal. Okay, with power planning, that's the last thing we want to do. We don't want you to change your lifestyle requirements or what you desire to spend on, okay, for your money. The main focus is on how to increase your net wealth without having to do it. All right, so let's have a look. Okay, so of course, with power planning, there are also limitations. And the first thing is you will need to make investment decisions first before coming to us. Yeah, because we don't provide financial product advice. Okay, second thing is in our modeling, we actually need to use a lot of future predictions. Okay, so that could be subjected to changes on tax law, and government welfare changes or financial markets, inflation, interest rate, etc., etc. Okay. All right. So the first example I want to show you here is retirement planning. So the first chart is actually if the client was carry on what he's doing now, and then basically how much he's having in his funding, both outside and inside super funds, will only be enough to last him until he's 81 after retirement. So he's going to retire at 65, and then you can see the asset is reducing, and then it's going to reduce to nil, okay, when he's about 81, 82 years old. Okay, and then enhanced scenario, that's actually with our tax planning, okay, or planning advice. All right, so that's basically we just advised him to contribute as much as possible to super fund, okay, concessional super contribution every year. So basically what that will do is first thing is because his marginal tax rate is 34.5%, by contributing more, he's actually saving tax on the contribution. And then one thing important actually here, I should have mentioned, he doesn't need that money. Okay, once you contribute to super fund, it's actually locked in there. You can only have access to it once you retire. So for him, for this particular client, he didn't need the money. All right, but he was investing on share market outside super fund. So with all the earnings, he's also paying 34.5%. All right, but by contributing more to super fund, also reinvest on that extra contribution, that's actually increased his net wealth by quite a lot. So you can see, okay, from the top one, that's original bond. Yeah, if by the time he retire, he's going to have probably say about 900K left, okay, to be used for retirement. And then after our planning advice, so he's going to have about 1.3 million, yeah, on the peak, and then that will start to reduce when he spends, yeah, on the retirement, but it's going to be reduced to nil when he's about 96 or 97 years old. So of course, he doesn't need to change any lifestyle requirements. Okay, he doesn't have to cut down any expenses now to try to save for the future. Okay, and then he's actually increasing the his asset by another 15 years. Okay, from 81, 82 years old to 96 or 97 years old. Okay, so that's the first example. So you can see how important for you to know or where to invest your money. So you want to invest your money in the most tax efficient way, especially for retirement savings. So the most tax efficient way is to utilize the 15% tax rate within the super environment. Okay, not outside super environment. That's actually on your marginal tax rate. All right. So that's the first example. Second example I want to show you is actually a property investment. So this one, also the top scenario is actually the couple, okay, a couple owning the asset and then basically split the property half-half, okay? And then at the end, they're going to have about a bit below 4 million, yeah, on the net asset they have achieved on that property. And then on the enhanced scenario, they'll have probably about like 5.5 million. Okay, you can see there's a huge difference. So how did we achieve that? So basically for this couple, they got a few adult children. So we actually moved the asset to a family trust structure. Okay, so that's actually reducing a lot on their year-to-year income tax and also future capital gains tax. All right, so here the two examples I'm giving you now, they're very simple examples. In reality, there are multiple other factors you need to consider. There might be people who already have a company structure. They might have a trust structure. They might have active businesses running in those structures, okay? And then they have rental properties. They also want to plan for retirement. So we will include all different factors in the consideration to help you to maximize your wealth in the long run, like in the next 20, 30, 40, or even 50 years for young people. So that's what power planning does. All right, so that's all the examples. Here is a brief introduction about myself. Here are all my qualifications. And then if you have any questions or have any recommendations, give us a call. Here is our contact details. And thank you so much for joining us on today's session. Hope we can talk to you in the near future on our power planning product. All right, thank you.